Hello everyone, this is the pre-market report video for 26th December 2022 in terms of Nifty and Bank Nifty. First, let's have a look what happened in US market on last Friday. We know last Thursday US market literally crashed because of their overwhelmingly positive GDP growth number. But that negativity was snapped on Friday. There were two important macros released, one PCE inflation data, then the next number of new home sales data. One comes in favor of the market and another one comes as against the market expectation. I hope you guys remember on December 15th, Fed chairman in his conference, he stressed about three parameters which needs to be slowed down if he wants to consider for pausing or slowing the interest rate hike, which are PCE inflation, unemployment or jobs related and housing related. I know I'm keep on telling Fed chairman's name, even myself bored of it, but what to do, US market moves based on his comments. Anyway, he stressed that he wants to see the PC inflation to slow down and to drop below 6%. It is his favorite gauge than that of the actual consumer inflation. That preferred inflation gauge on month-on-month basis, it increased by just 0.1% in November after climbing 0.4% in October. Basically, in his last meeting, he was not at all happy with the PC inflation data. Since despite the fact they were trying very hard like increasing the interest rate and taking the huge money out of the circulation. In the last 9 months, all the time PC inflation was always in the range of 6 to 7%. PCE means personal consumption expenditures. To say it in simple words, it's an indicator for statewide average price increase in all domestic personal consumption. And now, guess what? Finally, that PC inflation comes breaking at 6% resistance in November month on year basis. The exact number was 5.5%, which was the lowest value in the last 12 months. I mean, this macro was a problem for the Fed people even before the conflict. Initially, US market opened negative, but as soon as this PC inflation data was released, market turned positive and ended the day in positive. But the upside was limited by new housing sales data. I mean, according to the survey by Michigan University, people in US were rushed to buy the house by expecting the future rate hike. This resulted in more number of new houses were sold. I mean, 6,40,000 new houses sold in November compared to 6 lakh houses sold in October. In the end, Dow Jones increased by 0.53%, S&P 500 increased by 0.59% and Nasdaq increased by 0.21%. Tech stocks closed really mixed. Google, Amazon, Facebook increased from 0.5 to 1.5%, whereas Apple, Tesla, Netflix was down on Friday. There is no major change in dollar index and it is still around 104. But 10-year Treasury bond yield increased significantly to over 3.75% from below 3.7%. Regarding oil, I don't know the Russian Deputy Prime Minister's name. He said that in 2023, Russia is going to reduce their oil output by 5 lakhs barrels per day to 7 lakhs barrels per day instead of giving the oil in price cap. His comment literally increased the Brent crude oil to over 4% to 84.5 US dollars per barrel and WTI crude oil increased nearly by 2.5% to 79 US dollars per barrel. Regarding Indian areas, all were down. I guess it was down mainly because of the Friday's poor Indian market and not because of the global cues. Then about SGX Nifty, on Saturday morning it closed exactly at 17,900, equating it showing at least 50 to 60 points gap up opening today. So that's what happened on global market. Now coming to Indian market. I guess we all know at present that our Indian market is mainly dictated by this new COVID panic. Regarding that, there is one statement and one action from the government side. Honestly, I don't know which one the market will take. So you decide which one severe and which one will have the impact. First statement, Indian government's microbiology research organization CCMB, its chief, the director released a statement that India already developed the herd immunity, so this new variant may not be as serious as in China. So that is a positive statement. Now the negative one, central government's health minister requested the state government to conduct the mock drill on all their hospitals on December 27th. So as I said, I don't know for which news market will react since both of them in a way significantly important. Now coming to stock and sector specifics. First, regarding Reliance, last week there were a huge number of positive news but none of that was factored into the Reliance stock price. So I guess in worst case, it might be bottomed out around 2400 rupees. Last time it was bottomed out at 2335 rupees per share. Now it is trading at near 2500 rupees per share. Then regarding bank stocks at present, according to Money Control, FinNifty got the huge short build-up. But HDFC, not the HDFC Bank, HDFC got the maximum delivery percentage. Also, during the weekend, Finance Ministry issued the warning to banks that not to use the unethical practice to sell the insurance. Here in Money Control, they haven't mentioned which bank it is, but by researching it, I found out it's Axis Bank, so I guess it's negative for Axis Bank. Other than this, there is no bank related news. Then the next news is about Tata Motors. Last Friday in ADR, it was really negative and dropped over 2%. But during Saturday, they signed the agreement with Delhi Transport Corporation that they are going to supply and operate 1500 electric buses in Delhi. Yes, you guys heard it correctly. Tata Motors not only just going to supply the electric bus, they are also going to operate and maintain it for the next 12 years. It's a new business model, so successful in Delhi might make other cities to approach Tata Motors for the similar kind of deal. As a summary, last Friday US market closed positive, SX Nifty indicating the gap up opening, and at present 5 a.m. Indian Standard Time, US future market opened approximately 0.5% positive. So again, global cues looks positive, but if you see the Indian market, there is a chance Bank Nifty might underperform Nifty. Regarding IT, positive earning expectation and encouraging PC inflation is positive, but there is a one minor negative, which is this unusual increase in 10-year Treasury bond yield on last Friday. Also, there is a chance we might expect dead cat bounce today in the market since it dropped too quick. Now coming to technical, both Nifty and Bank Nifty forms a long bearish candle on the daily chart after a sharp gap down opening. This pattern indicates the resumption of a sharp downside. Nifty broke below the important cluster of supports at 18,100, 18,000 and 17,900. This decisive downside breakout of the crucial support level could suggest more weakness in the near term. The next downside level to watch out is 200-day exponential moving averages, which will be around 17,450 to 17,350. But the possible reversal can be confirmed only say if it crosses the 18,100 mark again. Then about the summary of moving averages and technical indicators, for both Nifty and Bank Nifty, it's all downgraded now. First, for Nifty, in case of moving averages, sell becomes strong sell now as it breaks the 100-day moving average. As I said earlier, only 200-day moving averages is not broken yet. About indicators, most of them turns to sell now, so it's a strong sell signal. Even RSI value for Nifty is dropped to 32, so it is also a proper sell now. For Bank Nifty, it's slightly better since it's not yet broke the 100-day and 200-day moving average. So as a moving averages summary, it's just a sell, not strong sell. Whereas in case of technical indicator summary, it's a strong sell. And in case of RSI value, it's 34, so it's to sell indication. From option change in open interest, there was huge number of new call options added at above 18,000 and the maximum nearby new call options added at 18,000 and followed by 18,100. So 18,000 becomes the immediate resistance. Then from options open interest data, 17,500 and 17,800 got the maximum nearby put options. But 17,800 also got the significant call options, and because of that 17,500 is the support to look out for. Then coming to Bank Nifty, based on change in open interest, the maximum new call options were added at the 42,000. So 42,000 is the immediate hurdle or resistance. Then based on overall options open interest data, the nearby maximum put option is present at 41,500 and 41,000. Since 41,500 got small call options as well, thus it's an immediate support to look out for. If it breaks, then 41,000 is the support to look out for today. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.